Robinhood stock just delivered one of its biggest after-hour surprises of the year. After closing Friday's regular session down at $101.25, the stock suddenly shot up more than 6% in extended trading, finishing at $107.33. The reason? Robinhood is finally getting what shareholders have been waiting for, a spot in the S&P 500 index. Caesars Entertainment is being removed, and Robinhood will be added later this month. For a company that has seen its share of volatility, this is a landmark moment, and potentially a turning point in the story. Today, we're going to unpack exactly what this development means, why it matters so much to shareholders, what risks and opportunities lie ahead, and how Robinhood is positioning itself for the future. For months, if not years, there's been speculation about when Robinhood might be added to the S&P 500. The company has had the size, liquidity, and profitability to be eligible. Its market capitalization sits north of $80 billion, trading volumes are strong, and the company has been consistently profitable. Yet, each time the index committee updated its constituents, Robinhood was passed over. Most recently, Interactive Brokers was added instead, a decision that frustrated Robinhood investors and triggered a midweek sell-off earlier this summer. But patience has finally paid off. With the latest rebalancing announcement, Caesars Entertainment is being removed, and Robinhood is officially being added. For shareholders, this is validation. It means Robinhood isn't just a controversial fintech or a meme-era trading app. It's now recognized as one of the 500 most important companies in America, enshrined in the benchmark index followed by trillions of dollars in global capital. So why is this such a big deal? First, inclusion means inflows. Every fund that tracks or benchmarks against the S&P 500 will now be required to own Robinhood stock. We're talking about trillions of dollars under management, with potentially billions flowing directly into Hood shares. This provides a new, steady base of demand. Second, it brings legitimacy. The S&P 500 is a stamp of approval. It tells the market that Robinhood isn't just a volatile trade but a company with the fundamentals and scale to stand alongside giants like Apple, Microsoft, and JP Morgan. For institutions that previously avoided Robinhood due to its perceived risk or reputation, index inclusion can change the calculus. Third, it reduces volatility over the long term. Now, to be clear, the short term could be very choppy. Index inclusions often spark sharp moves as funds adjust their holdings. But over time, having that steady base of passive inflows and index fund ownership can smooth out some of the extreme swings. It's also worth noting what this replacement signals. Caesars Entertainment has struggled in recent quarters, weighed down by debt and uneven demand in the casino sector. By contrast, Robinhood has been riding strong momentum, fueled by surging trading activity, booming crypto revenues, and rapid user growth. The index committee doesn't make these decisions lightly. Removing Caesars and adding Robinhood is a reflection of where the US economy and markets are heading, away from traditional entertainment and toward fintech, digital assets, and new age finance. Now, let's lay out the bullish case for Robinhood with this news. First and foremost, index inclusion itself is a catalyst. The after-hours jump to 107 shows that investors see this as game-changing. Passive inflows, greater legitimacy, and higher visibility can all support the stock price. Second, Robinhood's fundamentals remain strong. In the most recent quarter, the company delivered 42 cents in earnings per share on nearly $989 million in revenue, a 45% increase year over year. Assets under custody climbed to $279 billion. Funded accounts reached 26.5 million. And average revenue per user is rising, now sitting at $151. Third, the growth roadmap is compelling. The Bitstamp acquisition gives Robinhood a foothold in international crypto markets. Tokenized stocks and ETFs in Europe open the door to 24/7 global trading. Staking and futures products diversify revenue beyond traditional commissions and interest. All of these initiatives point to Robinhood being more than just a US brokerage, it's evolving into a global fintech platform. Fourth, the macro backdrop could turn favorable. If the Federal Reserve begins cutting interest rates later this year, risk appetite could increase. That could mean higher trading volumes, more crypto activity, and a lift for fintech valuations overall. Of course, it's important to temper the excitement with realism. There are still risks here. Index inclusion doesn't magically change the fundamentals. While inflows from index funds help, Robinhood still has to execute. If user growth slows, if crypto volumes collapse, or if new products fail to gain traction, the stock could struggle even inside the S&P. Valuation remains a concern. At a forward price-to-earnings ratio north of 40, Robinhood is not cheap by traditional metrics. Bulls argue that high growth justifies the premium, but skeptics will point out that expectations are already lofty. Volatility is far from gone. Even with more institutional ownership, Robinhood's exposure to crypto ensures that swings will remain part of the story. Investors should be prepared for big moves both up and down. Regulatory risk is always in play. Tokenization, crypto integration, and fintech innovation all exist in rapidly evolving regulatory landscapes. Any negative developments here could weigh on Robinhood's outlook. So what comes next? A few things to keep in mind. Watch how the stock trades as we get closer to the official index inclusion date later this month. There could be significant volatility as funds adjust their holdings. Sharp pops and pullbacks are common around these events. Pay attention to crypto. Bitcoin and Ethereum remain major drivers of Robinhood's revenue. If crypto strengthens, it could add fuel to the stock's rally. If crypto weakens, it could dampen enthusiasm. Monitor analyst commentary. With this inclusion, we could see a wave of updated price targets and ratings revisions. Bullish analysts already have targets as high as $130, while consensus sits closer to $97. Shifts in sentiment could move the stock further. Look out for news on Robinhood's roadmap, particularly Bitstamp integration and tokenization. These initiatives could become more prominent now that Robinhood is in the spotlight of the S&P 500. Robinhood's addition to the S&P 500 is more than just a headline. It's a milestone, a validation, and a potential turning point for the stock. For shareholders, it's what many have been hoping for, a sign that Robinhood has graduated from a volatile upstart into a recognized player in the U.S. financial landscape. The after-hours jump to 107 underscores how meaningful this is. But investors should remain cautious. The stock is still volatile, the valuation is still high, and the risks haven't disappeared. The cautious bullish view is this: S&P 500 inclusion creates a new baseline of demand and legitimacy. It strengthens the long-term story. It makes Robinhood a stock that many funds must own, not just want to own. Combined with strong fundamentals and an ambitious growth roadmap, that positions Hood well for the future. But near-term, expect turbulence. Index rebalances are messy, crypto is unpredictable, and valuation pressures linger. The key for investors is to separate the noise from the signal. The signal here is that Robinhood has made it into the big leagues. That's not just news for today, it's a foundation for the years ahead.